Hello, everybody. Hopefully, you guys can all hear. Sorry if you joined the other couple that I set up, but it's really weird the way you schedule live streams, and it always wants to connect it to my webcam for some reason. So I don't know what that's all about, but I try to run it through this streaming software because it's a much better experience. So if you joined on one and just now making your way over here, thanks for making the extra effort. Today we're going to kick things off by talking about what's going on in the news. Most notably is the Gamestop run that's going on right now. And there's LD. Hey, sorry, I switched the streams around. Still figuring out how to connect my software to everything. So apologies for the runaround. But I wanted to talk about GameStop today for a second anyway, while people are coming in. And this stock, this is today. So Reddit, there's a bunch of people on Reddit who were big on GameStop, and they kind of had their own little philosophy about it. But then it went out and got a popular short seller, started ragging on it, and all the people on Wall Street Bets Reddit kind of like unified, and they went on a tangent, and they all started buying it to squeeze the short sale. And holy mackerel, it went to the moon today and back. I think it's plus 37% today, and it's unbelievable. So you should read about that. Here's a little piece about it. GameStop halted for trading after 70% jump in a short squeeze. So on and on and on. You can read it yourself, but talk about, power to the people. I mean, unbelievable. And it's so good that this happens every now and again, because we are the minority in terms of the money that we spend as retail investors. So getting a win against the big dogs, is great. I don't know how long Wall Street Bets is going to last with this sort of collaborated effort, but for today, anybody who participated in it, congratulations and good news for them. The next thing I wanted to show you guys was, I don't have a picture, but I was watching Meet Kevin. If you guys follow him, he's outstanding YouTube celebrity. And 2 or 3 days ago, Meet Kevin did a piece or was talking about GM stock as an electric vehicle play. And I had to laugh because it was, I've been sort of saying that in the background. And I just want to call out to give you guys something to look at later. But it's way down here. I did 1 month ago, I did this video, and not that I was the first person in the planet to think about it, but you should watch it, because in addition to whatever I said a month ago about GM, they actually added another layer to it, and that is that Microsoft has a partnership. I don't think the Microsoft thing is gigantic, except for the fact that they've got another well-funded company that's helping them on this project, right? So I don't really think you sell Tesla and buy GM. That's not what I'm saying. But I think GM's got a lot of interesting stuff, and I covered it in that video. Hardly anybody watched that video when it came out, and that's okay. I understand it's not, there's a lot of stuff I talk about that nobody cares about. So, but I encourage you, now that Meet Kevin's on it, to go take a peek at it, because I think they've got some interesting potential. The big drawback for GM right now is their debt. Their debt load is huge. They are positive, EPS, all that stuff. But, don't underestimate their debt load. Obviously, a company like Microsoft, if they wanted to, could, put a debt in something like that. I don't think Microsoft's buying GM, but it's an interesting game. I would rather buy GM than Lucid Motors, who has yet to produce a vehicle. I would buy it probably over Workhorse. Just because, even though they have contracts, there's not a lot of proven commodities in there. So that's just my 2 cents. And then the last thing I'm going to put on the board, and then I'll get into everybody's questions, is earnings next week. Okay, so I'm pumped. Like, it's ridiculous, actually. But I am very pumped about next week's earnings because, guys, I said it last week, we've been waiting for companies to have to tell us what's going to happen in 2021. I don't think they'll all tell us, but effective, basically Tuesday the 26th is the first day of anybody most of us care about, I should say. You got Monday, this is Monday the 25th. A lot of these I don't really care about. Anything that is a bank, I really don't care about. But on the 26th, you got AMD, Microsoft, GE, Starbucks, Verizon, 3M, I don't care. NextEra Energy's been sort of hot lately. So that's just Tuesday alone. Then you get into Wednesday and get your popcorn for Wednesday because you've got Apple, Tesla, Facebook, Boeing, which is obviously intriguing for a lot of different reasons. ServiceNow is very popular. Are we missing anybody? Quantum, for Christ's sake. Speaking of companies that don't have any products, theirs is like 2025, so I don't know what the hell they're going to report, but they're coming on. So a lot of good stuff on Wednesday. Let me scroll back to the top here and highlight, see, after the bell for Apple, Tesla, Facebook. Boeing is before the bell. Mostly after the bell. All right. Let's look at Thursday. Big day for me. Visa after the bell. McDonald's and these airlines are big because a lot of people are doing that play, right? Of the airlines bounce back. And geez, the first one was United and they sucked big time. So it'll be interesting if these guys do anything. McDonald's. Whether or not you care about McDonald's, it's always good to get consumer sentiment from the largest restaurant chain. MasterCard, Skyworks Solutions, very popular. And I think that's it on that one. Okay, so that's Thursday. No Fridays. That's weird. Oh, here we go. Sorry. Friday, Caterpillar. I don't do much with industrial, but Caterpillar is very good because they give you a sentiment on upcoming capital projects, particularly roads and large construction like that. And gosh, that might be the highlight. You got a couple oil companies, Phillips 66. All right. So it looks like, Wednesday, Thursday, huge days. I did the Apple video on Monday. I think it was Monday. And everything that you read on the internet suggests that they sold a shit ton of phones and computers. So I assume that they are going to beat earnings. But the bigger part of Apple is... thinking about that M1 chip, and I did Intel yesterday. I've got AMD coming this weekend. I recorded most of it this morning. So I'm sort of in this chip hole for a second because once you start studying chips, you kind of got to stay in that game for a minute or else you'll forget everything. So Apple's M1 chip, any updates there is going to be interesting, as well as how China sales are going for them. It looks like they're rebounding in China. That should have been a scary time for them because that's a big part of what they do. But it looks like the stuff that I put on my Apple video, it looks like they are doing okay there. So, and then Facebook, we talked about Facebook this week on the channel as potentially being undervalued. Be interesting to see what they come up with, because don't forget, they went through the election in Q4 and obviously most recently some of the political unrest. So it's hard to tell, what they're going to have to say, but I'm guessing from a revenue standpoint, which is mostly advertising, that Q4 should have been a good quarter for them. All right. And then Tesla, always interesting, right? They released their numbers a while ago, 2 or 3 weeks ago, about the number of units that they were going to deliver. And I think they hit their core goal. Now we have to see, though, did it translate into earnings? And that is a game that most people overlook on Tesla because, the infinite growth or whatever. But the fact of the matter is, Tesla has a EPS now. They're expected to have an EPS that grows 100% a year for the next 3 or 4 years. So they need to start putting that on the board, or else you have to back down some of the valuations that you're going to trade Tesla at, in my opinion. So their report will be very interesting as well. All right, so that was a lot. I'm going to get a drink here and look at some questions. Just 1 second. All right. First one, bought Realty Income yesterday. Congratulations. That's a good long-term dividend stock, absolutely for sure. 49s, OZSC. Never heard of it, but let's look at it. Energy. You guys are getting me with these energies lately. So I don't do a ton of energy. Holy cow. Penny stock territory. Hard for me to say. Let's see. Charging stations. Yeah, you're catching me off guard with this one. If they're penny stock today, but they're getting into evolutionary EV charging stations, then they certainly have an opportunity to go up. The secret formula for tripling your stock this year is either become a SPAC of some kind or stamp batteries and EVs on your stock. So for 49s with OZSC, I look at it from where I sit and how I look at stocks, and I'm like, well, it's 7-8 cents. But all it needs is one stupid article to come out on Reddit or Seeking Alpha. And yeah, if it went up to 50 cents, what's that for you? That's a 7x. So if you want to take those chances, there's, less. That's as cheap as you're ever going to find. I don't even know if I could get that because it's OTC, over the counter. I don't even know if I could buy it in Ally or probably Fidelity would have it, but good luck on that one. Bruno, good to see you. LD, I noticed today was Short Buster Day. Yep. Bed Bath & Beyond. That's interesting. I remember you talking about that. Bed Bath & Beyond and what was the other one? Overstock. So let's just peek at them. Oops, that's Best Buy. I'm sure that happens all the time. Yeah, up 8% today on Bed Bath & Beyond. They did have pretty good short ratio because, So on December 31st, Bed Bath & Beyond was 83% short shares of float. So unfortunately, that data was from December 31st, so it could have, changed. And every Friday, mostly every Friday, shorts expire, depending on what the person was trying to do. And so Fridays, while they're quiet, they are always a big short day for somebody out there. And this could be the day for Bed Bath & Beyond. Overstock, I didn't see what they're doing. They're up 5.8%. I'm just going to look at their short percentage real quick. Not nearly at Bed Bath & Beyond's level, 17%, but still. I also saw some in like my phone alerts or whatever that e-com was generally up today. I'm looking at Etsy because that's the one I hold and it's not doing anything. One thing that was really interesting this week that kind of turned itself around today, let me see if I can show you here, is the Russell 2000, which is all small caps, right? 2,000 small caps. It was on, what's the date today? 22. So it was sort of on this downward slope this week. I'll try to get it. There we go. I guess around Wednesday. And it went all the way down here. And what you saw was some money going back into like the FANG stocks and the bigger stocks, but now it's up again today. And I was wondering to myself, did the Russell rebound entirely on the GameStop premise? And I guess, you mentioned Bed Bath & Beyond. I don't know if that's enough to push that thing. But if small caps start to struggle or go down as a group, just keep that in mind, because a lot of what you're seeing when you're reading the news and a stock goes up 40% or whatever, that's going to be a small cap stock. I'm actually kind of thinking that the FANG names, as well as some of the other big dogs, are going to see some inflows in money as this stock market continues to run hotter and hotter. Because if you go by my Facebook video that I did, and Netflix prior to earnings was the same way, I think Amazon, those three in particular were definitely undervalued stocks. Netflix, not so much anymore because it went up $75. Facebook hit a mini run, but I still think it has room to go. Amazon, my target price for this year is between $3,800 and $4,000. So it has room to run. And all three of those companies are producing huge EPS beats for the year. So they're not just a earnings play. I think that you can feel good about them for at least a year, and obviously probably longer. But in 2021, their EPS plays are looking really, really strong if you go by what analysts are projecting. All right, got off on a tangent. Yeah, LD with Rocket, keep waiting. For a second, it went over 20. Thursday, Wednesday, something, who knows. And I thought, oh, well, 20 had been a little bit of a resistance. We need those shorts to disappear on Rocket. Every Friday, Rocket has a chance to go somewhere. 49 says I should start announcing which stocks I'll be shorting. Dude, or you know what my trick is? If you're a guy like me who waits for prices to go down, just go buy a share of something, because then it goes down immediately, which is pretty funny. But I feel like every time I buy a stock, the next 24 hours it goes down. So if I ever get mad at a stock going up too high, I should just buy a share. AM Voss, Happy New Year. Thanks for response on rocket prepping for spring real estate. Would your analysis still be the same? Increased interest rates? Yes. So the only people talking about increased interest rates is the media. I wish I could. I'm going to talk and search at the same time. But if you go, Jerome Powell had a conference or a Zoom call or some shit last week, and he went on and on and on about nothing's changing, that the interest rates, we have no plans to move them, and we expect to support the economy for the long term. 1 second. I'm close. All right. Right here. So the date is January 14th. Pal's on this, whatever the hell this, Zoom meeting is. And here's your quote. When the time comes to raise interest rates, we'll certainly do that. And that time, by the way, is no time soon. Powell addressed a range of issues, blah, blah, blah. Should inflation accelerate, we have the tools for that and we will use them. He said some other crazy stuff that I couldn't even believe that he was saying. Let's see if they got any good quotes. All right, it's not in here. But in addition to that interest rate comment, which is all you need to know, because he's the only dude that matters with interest rates. But he went on, there's bank people on these calls, and he's telling them, I understand the market's hot. This is not a good time for you to pull back your investments, AKA don't stop putting money in. And I was dumbfounded that he even came out and said it. So he's wearing it on his sleeve, and AM Voss, I don't know what else you need. You know what I mean? Like, that's the guy. And yeah, the 10-year and 30-year, those things might go up nickels and dimes, percentage points, or excuse me, tenths of percentage points. But relative to history, the interest rates are going to be a good deal for a long time. I'm holding Rocket. I promise you guys that I will tell you way in advance if I were to sell it. But I have zero plans to sell it at this point. I'm not even in, when did that come out? August? I don't sell anything unless I've owned it for a year for tax reasons. All right. Hello, Jeff. Has your stance on SDC changed any? No, I'll try to do an update. I know it went down into the 10s. If it goes under 10, I'll buy another lot. Put it that way. I was looking at options for it. I thought for fun, for videos, I don't do options really, but I thought it might be fun this year to do a few options, like long call options, just to add some new flavor to the channel. But yeah, I'm still in. I don't anticipate there'll be much of a move until, summer, maybe May, but I'm still holding. Alex, what is TJX? If you're in the United States, and I think some other countries too, it is a chain discount. It's a discount chain store, mostly for fashion, but super popular over here. And they also, in addition to owning TJ Maxx, they also own Home Goods and a company called Sierra Supply Post or something. It's a long-term winner. So TJX, the reason that it is in my portfolio is because, well, most years it's a dividend stock, and most years it's a growth stock. Pandemic obviously crunched it, but we are now back to all-time highs. And with the stimulus coming out, I don't see any reason why it won't keep growing. They are one of the few chains left in America that is still building locations. And they haven't even really started to reach peak opportunity in home goods. So it's not a sexy stock by any stretch of the imagination, Alex, but it's a grinder. It is a perfect play for me because instead of, it's growth, but it's not like mega growth. Assuming there's no pandemic, it's a very low risk. And over time, it puts out dividends, and they do a lot of stock splits too, which I don't really care about that. But if it gets too far over $100, they always do a stock split. So hopefully that helps. Let me get a drink here. All right, Francie, what to hold over the weekend? If you're discussing like swing trades, like a lot of guys and girls do, where they buy something on Friday for Monday's news, I don't. That's not something I do, so I wouldn't be able to tell you. If I had to guess, if you wanted to be crazy, you could place your bets on Facebook and Apple because their earnings are next week, but that's not a fully vetted answer. What's up with Blackberry? Blackberry is in the same world. Look up GameStop and Reddit. Blackberry is their next big one. So they've had some catalysts. They sold some patents to Hawaii, and they also reached a settlement with Amazon, or not with Amazon. I can't remember. But and then they have a partnership now with Amazon to produce some software, and the guys over at Reddit are pumping it just like they pump GameStop. So there might be a play there if you like roller coasters. I think fundamentally the business is better than it was 60 days ago, but I don't know if it's $100 stock, and I think that's what the goal is. 49's IBM. It's been years since I respect them. Just a dividend beast, but I mean, has IBM ever increased their sales in the past 5 years or their revenue? I have no idea. The only thing that's interesting with them is, don't they own like HBO, I think, or HBO or something like that? That's the only bright spot I could see. Any thoughts on Volkswagen? I read a piece the other day that suggested Volkswagen is having a decent amount of consumer complaints with their new EV car. I don't know how true it is, but that was in the article. Volkswagen is shocking at how big they are on an international scale, particularly in China. So I think that they definitely have a shot at that market. But there might be some quality concerns in the short term, so double check that. Hey, Andy. Hey, good afternoon. Never talked about Chewy. Yeah, Chewy. So I do have a cat wandering around my house, but I don't have a ton of dogs and stuff. But Chewy, you're right. It's hand in hand with Etsy in the sense that the e-com stocks go up as a group. A lot of these that are e-commerce only. I think Chewy is a good, solid play. I always get a little befuddled on it because I don't know what's really unique. You know what I mean? Like, what does Chewy do that 6,000 other stores don't do, right? So whether you're getting delivery from Kroger or Target or Amazon, what's Chewy really bringing to the table? But it's popular. I would have to research it more to tell you. That's why I don't talk about it very much. Sales, let's see what analysts say, just for fun. All right. Well, here's another reason it would never probably work its way into my life. Year ago, EPS was minus 63 cents. Great year, I assume, with the pandemic. They put a nice, chunk into it there, get it down to minus 38. But even next year, struggling on the profitability front, sales growth year ago, 485. This year, estimate, 7 billion. That's a 45% difference. And then next year, analysts, 8.82 billion is the expectation. That's only a 24% growth, which is awesome in most years, but there's a negative comp opportunity right here. So in my opinion, when you see that negative comp opportunity, and Etsy's going to go through this too, more than likely, there's a chance they might have grown their pool a lot bigger. But what's going to happen with a lot of these ones that were popular during the pandemic, they're going to get to Q2 earnings, right? Q2 and Q3, because that's when the pandemic was that's when everybody was locked down. And they're going to say, our Q2 earnings in 2021 were $10. Compared to last year, they were $20. And even though that makes sense to most of us, the street won't be able to handle it. And they'll be like, oh, shit, they're not growing anymore. Forget it. I'm out. So I hate negative comps, even though they make sense. That you had a pandemic, the world was X, and now it's different. Chewy's still a good company. They're not going to go out of business. But negative comp setup is real, I think, for Chewy. And it's probably real for Etsy. I'm kind of sort of hoping with Etsy that they've grown their user base and their store base so much that it may not be that bad. Etsy gets a lot of attention because they sold masks during the pandemic when nobody else had them. People were making them at home. It's kind of a false story. If you go as recently as like June, mask sales were like 1%. So if you hear that story, don't waste your time or go read the numbers yourself. The numbers are there. Etsy is really good about being transparent in their earnings calls to say, we know you're worried about mask sales. Mask sales are over here. Now they're actually like 1%, etc. Mask sales were a big part of us growing our user base, but we've seen that users come back and they buy XYZ. So I kind of spilled into Etsy there, but hopefully I answered the question. Carlos, do you invest in Bitcoin? GBTC, I use the Bitcoin Trust. Video coming out tonight. I think I scheduled it for like 7 o'clock or 7:30. And everything that I do with Bitcoin is in there. And I'm going to make you watch it and not tell you all the awesome things that I shared. But yes, I believe that Bitcoin is an opportunity, and I'm glad that I have 1-ish% of my portfolio centered around it. Going forward, for me personally, my Bitcoin investment will be third party through owning PayPal and Square. That's how I'm going to attack it. I don't want any physical, or I don't want my phone to turn into some $30,000 machine because I got one stinking Bitcoin on there. So there you go. Physical gold. Have some physical gold, not the bars, but I have a very small collection of coins that are only valuable because they're made out of gold and whatnot. I kind of wish I had more, but I don't know. I just never here's the thing with gold. If you dig deep and you try to read from an unbiased source, the returns aren't really super spectacular in the recent dips that we've had, right? So I'm not talking about 1935. I'm talking about from 1995 to now. If you look at it from a long term, there wasn't enough in there for me to say I want 30% gold. I think everybody should have something, but not. I don't go, balls to the wall on it. Aaron Schill, Sierra Supply is doing really good. Yep. That's a weird, they need more of those stores. Home goods, though, check if you ever read up about Marshalls and TJX. Home goods is the secret in there to growth anyway. Blackberry is probably a good long-term play. Yeah. If you're going to play Blackberry, you probably missed it already, but if not, you better buy some today. Radian Group. Yeah, so Radian Group I like this company. It's with Rocket in my portfolio, I don't need another mortgage company in my stock portfolio, especially considering Rocket's recent lull. What's cool about Radian, let's see if I can get this. They're a little bit more spread out. Whoopsie. So they have two segments, mortgage insurance and services. Mortgage insurance, PMI and all that stuff. And then the services group, transaction management, loan review, mortgage-backed securities, distressed asset reviews, valuation services. Sorry, it doesn't highlight very well. It is cool, and it's been there for a while. This company is not brand new. It's not an IPO. You can see over time it does really well. Then we have the pandemic, and this is a 5-year chart, by the way. Let's do a 1 year. So here's your pre-pandemic high. You probably got an easy $5 in there over a year or so, but it could take a while to do it. On the bright side, you'll get a couple bucks in dividend if you're interested. I started a journey down potentially buying it, and then I just reached the conclusion that with Rocket and the other opportunities that were out there, I just wasn't super excited in comparison with those. Greetings from LA, like all your great information. Have you heard of Billy? Purchased at 40 to 50 range. It's now over 130. I don't know if I have heard of that. Let's look it up. Bili. Bilibili. First, I got to see even what the hell it is. Provides online entertainment services for the young generations in China. Platform that covers a range of genres and media formats. Okay. Has a collaboration with Tencent. So it sounds like a Nickelodeon for China. I'm, obviously drawing a very simple comparison. Could be intriguing. I don't invest in Chinese stocks, just to be fair. The other thing that would scare me, unless there's news to back it, is that on November 17th, it was $50, and today it's $132. So something went really good. And that's what you bought it for, right? So you bought at 40-50 range. I don't know what their future is. But I myself, I would be out. That's 3x. And I don't know what the hell Bilibili is. Or you could do the one that I always say for folks that are on the fence is you bought your shares for let's just pretend it's $50, right? Sell everything, all your profit. Get your profit back, or get your cost of entry back and let the rest ride if you have good information on it. That's the easiest way to end the conflict in your brain. I would be more, I would probably focus on the profit more, but a million ways to do it. So hopefully that helps a little bit. With overvalued stocks and pumped up indices, do you think? Yes. Market needs a big correction. Yes. I don't want the market technically to go down. But I'm in for the long term, and it sucks, guys, like trying to find good value. I mean, you can't just close your eyes and bank on growth rates every time. And honestly, my hope, or what would make the most sense logically, which the market is not logical, is that we would get a 10% pullback, right? Even if it's temporary. But all the names that are, I would say, a little hasty, SPACs, etc., those would probably go down 50%. Amazon would go down 10%, right? GE or Target or whatever big company goes down about 10%. It is pockets of speculation. Talked about Netflix and Amazon. Those aren't nearly as overvalued as some of the other stuff in there. So I do hope that we get an opportunity to buy. I haven't bought. I don't know if I've bought anything this year. I bought a little bit. I bought Enphase out of the blue. But I'm trying to just wait even for a mild red day. 5% would be nice. Amazon got up 5%. Do you expect it to hit 3,600? I do expect it to hit 3,600. You ask about soon. I don't know about soon. Like my target for this year is $3,800 to $4,000, and I think that is a pretty good place to be. I wanted to check their earnings. So that's probably your next February 2nd. So a couple weeks yet. But, if they have a huge run up, or if they have an awesome earnings report and they come out and say 2021 is going to be higher than whatever the analysts have in the books right now, then you'll see a massive run up. I think they beat earnings with ease from a Christmas shopping season, but I don't know about the 2021. It could be one of those comp situations I talked about with Etsy. It's a 50-50. Railroads. We got a railroads question. I don't know. I don't know anything about them. I think that it's very intriguing that the railroads have hung in there this long and are doing well, and they've typically been a defensive play. It's just I don't really understand like how it could ever get bigger. You know what I mean? Like, have you ever seen anybody install railroads? Like, all I see is them taking them down. And I just don't know how that industry works, but it doesn't feel like a growing industry to me. I think they do provide some good dividends, and it is right for the right people. But for me, there's not enough potential in the long run to spend my time on it. If you had to invest 10K, oh God, another one of these, and not see it for 5 to 10 years, which 3 stocks? I would do ETFs. We did this last week. QQQ, 33%. Okay, here they go. QQQ, ARK-K, and I have some Vanguard dividend. I think it's VYM. I'm looking it up right now. VYM. So that's what I would do. Probably 33%. QQQ, ARKK, VYM. You say don't touch it for 5 to 10 years, and I'd be perfectly happy with that. Why was GME halted today? We talked about it at the top of the show. is basically too much action, too much price fluctuation. There's little circuit breakers, as they call them. So if the market as a whole goes down too far, or an individual stock goes up or down too far, the market actually stops. And in this case with GME, there's a huge short squeeze going on. Great analysis on Facebook. Thank you. Bought a few shares, and hopefully you're not done on those Facebook gains, because I think Wednesday will be an interesting day with their earnings report. IBM to buy. I'm absolutely not in any. I don't like IBM. Just to be fair, I understand why people hold it, but if you don't know a lot about IBM, I'll just share this. Them and AT&T, they might as well be the same stock. Everybody buys. The people who are most interested in them are dividend investors, and there's absolutely nothing wrong with that at all. I look for companies that have growth prospects, not necessarily 0 to a million, but I look for profitable companies that have good, call it double-digit growth prospects for the next 3 to 5 years. And unfortunately, IBM and AT&T are nowhere near that category. Netflix jump, I'm not surprised, because first of all, I thought Netflix was undervalued. And then secondarily, I don't know how much you studied it, but what they're saying is we don't need to borrow money anymore, is what Netflix came out and said. And they are going to be paying down their debt load, and they've basically gotten cash flow positive within their own business. So I am not surprised at Netflix. I think Reed Hastings should have all the credit in the world for the 10 years he's been doing this. And there was a time, it's not as prevalent now, but there was a time 5, 6, 7 years ago where a lot of people would invest in cable television companies because of the growing user base and the dividend that they paid. That's what Netflix is going to become eventually. It's going to be a high-paying dividend company that is everywhere, except instead of being a cable company in Michigan, it's going to be a cable company all over the world. I think it's a great investment for the long term. It's not going to get you wherever you think Neo is going to get you, but it'll continue to provide for you and your family long after you buy it. As far as Apple, I'm excited to see what they have to say. I kicked off at the top of the show with a little bit about them, and their M1 chip, I think everyone's worried about, excuse me for a second. Everybody's talking about phone sales, right? But that chip is everything, because that changes their game and that keeps more profits. Apple isn't growing like it used to, and I'm not surprised. So what's the next step, right? It's profitability, and it's more services and longer term revenue. That's what they're transitioning now into that game, and so it'll be great to see what they have on tap. KO is looking very nice. Why? Sorry, I'm trying to remember what. Okay, yeah, Coca-Cola. I'm like, why is that so popular? I wonder why they did K and O. Is that, which, by the way, they probably signed up for it like 600 years ago. But why weren't you CO or something like that? But anyway, I digress. Dividend, probably not a lot of growth. Let me just peek real quick. EPS is always going to grow with them. Sales growth, they're saying about 2.1% over 5 years. The Yahoo screen that sort of pools investor sentiment. Could be a bounce back year for Coke next year. If you wanted to take that and hold it for a year plus, get the dividend, and know that from a comp standpoint, they missed out, like beer companies, they missed out on movie theaters, baseball games, any sporting event, concerts, whatever. All that stuff was gone. So there could be a 1-year hold in Coca-Cola that would be well worth your time. And even if it stays flat, you're getting a 3% dividend. TSMC at 130. Love them. I will be buying more. I hate 130 mostly because I started at 75 or something. And so that's painful for me if you know me at all. So yeah, I'm watching it like a hawk. Samsung is making waves in chip world. And I think Samsung just announced a gajillion-dollar factory in Texas or something. So I think TMC is going to get picked on a little bit over the next couple months. Not that they're even freaking concerned about it, but I'm hoping that the stock gets picked on and gets under 120. We'll have to see. For inflationary play, that US drops, CVX and Opta be stronger. Whew. I don't know about those. 1 second here. CVX. Oh, Chevron and OPTT, Ocean Power. So I don't know anything about Ocean Power. Chevron, oil stocks, energy stocks in general. Yeah. I mean, if that's how you want to play a hedge against, I'm not worried about the US dollar, so I don't have the same concerns that you do. But oil stocks have to do better next year, right? Or this year, I should say. I don't see how they don't. Consumers are getting back on the road. Gas prices are going up. I don't see how they have a worse year than last year, regardless of who's making battery cars, 1 second. Sorry. So yeah, if you want to hedge on oil, go for it. I'm not, but that's not really that much different from a normal day for me. CRISPR, great. CRISPR is great. I keep it in my ARC fund. Sorry, I'm struggling. Carnival Cruise. Pretty soon I'm going to have a video that says travel stocks are wildly overpriced. And I think that the run for travel stocks that they're on right now is stupid, and it's way too forward thinking. 2021 is not return to par for your average travel stock. I like Expedia. I don't own it. It's massively overvalued right now. Hotels, cruise lines, you name it. Pretty much everything but Disney. Airlines too. People are expecting this to like Q2 is going to be some record-breaking year. It's not. Have you seen that we've distributed like 4 vaccines? You've got a while. So if you own Carnival, hang on. You might as well. But if you're thinking about buying it, I think you've got time. NIDEX stock. Don't know it. They sell motors and electronics. Unfortunately, I don't know anything about them. Looks like an EV play is the latest out of them. They are going to build a $2 billion electric vehicle motor factory for Europe. And in that situation, just based on market momentum, and these guys have had good momentum all year, really, why not? Anything with EV on it sells for $1 billion. So I don't know about it personally, but why not? It wouldn't surprise me if somebody writes an article and it goes to 100. What's your stance on LendingTree? So I thought LendingTree, okay, you got them at 272. I don't know if I mentioned it in a video, but they were down big. Bring it up here. Guys, sorry about the cough. Yeah, 238. Oops, sorry, can't see that. 238, and now they're working their way back up. I thought this was a steal in here. I like what they're doing. They're a under-recognized ARC stock that nobody knows that they hold them. So they have potential, and I think at 270, I would keep holding. If ARC keeps holding at 270, you're already up. Keep holding and see what happens. I got to get some more water or else you're going to be tired of me coughing. Just a second here. Luckily, I have a handy water dispenser in the office for just this occasion. All right. Square has dipped to 220. Almost bought some today. I'm averaging 205, so I got in way late. Almost bought some at 220. Where is it at right this second? Let's take a look. Where's my mouse? $222. You see how it had that, sort of 227, 230s, almost 250s that it came here. I should buy it. That PE ratio sucks, though. But I'm closing my eyes on Square and just buying because of Cash App. And that's something I don't normally do. So in 2021, I've decided to put a small segment of my investments to close my eyes stocks, and kicked off the year with Square and Enphase because I liked some of the stuff that they were doing, and I knew I wanted solar. Enphase is wildly overpriced in my opinion, but solar in general is overpriced, so what's the difference? And Square, if you buy it, you just say 3 to 5 years at this price. You're 3 to 5 years guaranteed. And that's okay. I don't mind. Cash App is huge. And it's just a lot of what Square does is the reason that I like PayPal so much. So just sharing with you guys my confessions for 2021. Enphase and Square are illogical picks, but I decided just to do it and see what happens. Yeah, I'll talk about Enphase in a second, Jordan. MGNI, I almost bought this. It's a semi-similar to Trade Desk. Trade Desk has a lot of different advertising outlets. MGNI is just focused on the over-the-top television or whatever they're calling that nowadays. It looks really cool. And the best part is they have a locked-in deal with Disney. Man, it is like just crazy how fast stuff runs up. So if you're buying it, I don't blame you. I couldn't get past the fact that it skyrocketed so much. And then it had a short report come out and sort of went downhill for a minute, about right here. And so I'm like, okay, short report. I'm still interested. You know, I'll just wait for it to get back to whatever, $15 or whatever it started at. And it just keeps going. $39, which is nuts. There's no analysts. Nobody knows what the hell is going on. 7 analysts. Current year, they might make a penny this year if they're lucky. Next year, they'll 7x that to 8 pennies. So it's not huge. Look at these stupid numbers. $200 million in revenue, and it jumps to 50, you know, adds another 50 million to revenue. But guys, like Intel makes that much money during lunch. So it's not like it's some behemoth, and people just jump on this shit nowadays like dogs. So if you are in digital advertising, and you have used it, like if you work at an agency or whatnot, I mean, I love the idea. I just can't believe $40. It just astounds me. So, however, if you want to buy it for $40 and put it way off in your portfolio and never touch it and look at it in 5 to 7 years, you could be in an awesome spot. I can't buy something that far overvalue because I don't want to be trapped that long. So that's just, you know, my take. So there was a question about Enphase from Jordan. I'm a huge, I should say, I'm a newly found Enphase fan, and I added it to my portfolio this year, and I'm anxiously looking to add more. You know, minus 0.08 isn't really super awesome. I think I got in at 205. That's a 1-year chart. Look at this run up. This is the antithesis of any stock I would normally buy. Same as Square. This run up from November at 128, or let's go back. Halloween at 100 to, you know, January at 200 is a little absurd, but I really like what this company's doing and how they've built out these micro inverters and how they are really unique in what they're offering the solar market. And 1 second. I'm not going to bore you guys. There's a video on this, but I want to show you why I like them, because it's not really like me to pump a stock. So these things here, I don't know. Yeah, hopefully you can get a good picture of that. These micro inverters go behind each and every solar panel. And that's different than what most people are doing, which is they have these string inverters. So instead of having all these little micro inverters that Enphase is good at, you normally have one big inverter that's attached to your roof panels. And what happens is it's not as efficient. And then the worst part is that if it goes out, your whole thing's down. So Enphase focuses on this technology. They do not make solar panels. They make the inverters and the storage system, which also has inverter technology. So every single solar panel is connected by an inverter on the roof to an inverter in the storage area. And then as a homeowner, you get a little app that shows you how things are working. So that's a 2-second pitch. I have a longer video on it. I'm excited to talk about it because I like that it's unique. And I like that it's in residential. The downside, to be fair, is residential is the harder play. So Canadian Solar, for example, I was talking to somebody on one of these live streams, brought up a good point that Canadian Solar has a ton of government business and like, energy fields and stuff like that. I can't argue that. That's better than trying to sell to individual homeowners. What I like about Enphase, though, is they're distinctly different in what they're offering. Don't buy, in my opinion, don't buy a solar company that makes solar panels because they're a dime a dozen. And the stuff that I read suggested that Trump's tariffs on imports has slowed the arrival of Chinese-made solar panels, but they're already out there. And I think a company named Jinko or something already makes some. And once Biden inevitably lifts those tariffs, then we'll be flooded with Chinese solar panels. But they don't make the inverters. And so just be careful investing in solar panels by themselves. Look for companies that are doing something different. And Canadian Solar is good. I don't live in Canada, so I'm not super interested in it. But Enphase, I gave you my pitch on them. Solar Edge, SEDG, they're the biggest. Their growth rate's not as high. They are profitable, so is Enphase. But I think Solar Edge is getting boxed out a little bit by Tesla. They used to provide Tesla with inverters, and then Tesla made their own. Tesla made inverters. They didn't make micro inverters. So Enphase has still got some competitive energy there. Hopefully that helps. I get a little excited about solar because I studied the crap out of it before I bought Enphase. What stocks are you personally interested in? I'm honestly I still want to add to my winners if I ever had a minute. But you know how things are going with the market so hot. I want to bust out my watch list real quick. Sorry. So on my list, out of stuff I just talked about, on my list of stuff to add to on any sort of weakness is absolutely Etsy, absolutely Enphase, absolutely Square, and very unlikely that PayPal will come back to the level I need it to because I've had a good run with it. But I would potentially add PayPal as well. I invest in DraftKings, but I'm probably done with my investment at that level. So those are the ones that I own. As far as things that I don't own that I'm watching, that would have the biggest potential that you guys would think is good. I got an AMD video coming out on Sunday that's pretty intriguing. I would consider them. Man, the chip space is difficult. There's one that you can watch if you're into rebound plays that I'll probably get into here shortly. Sabre, old company. I called it out in one of my videos. Old company, used to be at 22, now it's at 12. They basically they do the booking and reservation, like the massive booking and reservation system for airlines and hotels, or not hotels, airlines, and I'm forgetting something there. Not just the planes, though, but where people make reservations for the planes. That's my best bounce back pick I got right now. Certainly has potential to go to 22 by the end of the year. We're playing with fire, though, because everything they make, all the money they make is based on per transaction of a flight. So you have to have flights come back before they make money. And flights are back, but not at strong enough levels yet. So that's one to watch. TSM, I like them. I don't know if they'll come down enough in the short term. Yeah, so nothing super duper sexy. I guess I would say, on my stuff right now. I would, Palantir is interesting. It used to be till it looks like it's up 25% today. I was really hoping Palantir was going to be down to $20 because all they do is rely on government contracts. And I don't think that that's a huge win, but for some reason it's up today 25%. So that's a no-go in the short term. Airbnb, I would do, but I'm telling you, man, a lot of stuff, in my opinion, is expensive. It will be better when we have a dip or a correction, because I think that you can start to sort stuff out a little bit better then. And the other thing that I encourage everybody to consider, if you are on the fence about whether you want to buy right now or not, next week, pretty big earnings coming out with Apple and Facebook and Visa, and there's some others there that I covered at the top of the show. So keep that in mind. Like, some of the truth is coming out. Some of the like God's honest numbers in writing are coming out next week. So instead of speculation that somebody's going to do this or that, or they should have had a good quarter, we think they did, it's all going to be written down in stone. So we're not going to have guessing game. Did Apple have a good quarter? Are iPhones selling well? This shit will be written down next week. And that's when it gets real. And we can start to walk into 2021 knowing a few of the big players have already reported. So I hope that helps. Do I use options? No. Sitting at 1,500 profit via options, thinking to pull the plug. I'm probably going to do a few long options. One of them would be that Sabre, depending on the pricing. I didn't look at it this week, just for fun for the channel. So I had to, or I didn't have to, but I opened a Webull account. I'm not pitching them, so don't worry, you don't have to sign up. But I did it for myself just because whatever, the 4 free stocks. And so I'm going to make that an options account. And it's not going to be like, it won't have that much money in it. And I'm just going to pick some long 6 to 18 month call options to do and just keep it separate over there just for fun. All right, guys, it's 4 o'clock. I got to run. Coming up over the weekend, we have the GBTC video is tonight at either 7 or 7:30. I scheduled it for. And then on Sunday, I'm still doing the editing, but sometime on Sunday, there'll be an AMD deep dive as well. So hope you guys really enjoy that. Thanks for coming to the chat today. It's really good to see you. And next week, we'll definitely have a live stream of some kind next week. And my goal is to do it twice a week. So I nailed that goal this time. But anyway, have a good weekend. We'll talk to you soon.